I'm delighted to welcome back Michael Boutros from FXCM for this edition of Targets in Focus. Michael, let's get straight into it. I see from your projections you're quite bearish on euro-dollar in the long term.
Well, obviously we've been seeing the situation get more and more tense as time goes on, and certainly the resolution to the problems that we're seeing there in the eurozone are not going to be anything that are going to be solved, within a couple of months time frame. It's going to be a long process, and we expect it to be drawn out. And a prolonged issue that we're going to continue to see resurface again and again in Europe. So initially, we're looking for a breakdown of 124 sometime within the next 3-month period. But as the year progresses, we're still expecting weaker growth prospects in the first half of 2012. So it'll continue to weigh on the euro, and we expect this to last pretty much till the end of the year. 6 months out, we're looking at somewhere in the range of 121.80 to 122. With really the 12 months, like I said, somewhere around the region of 110.90, which is a 138.2% Fibonacci extension taken from the two highs that we put in late 2010 and 2011.
Obviously, Europe is very much in focus at the moment, but with the political risk surrounding the election and the budget deficit, won't pressure grow on the US towards the end of the year?
Right, absolutely, and there's definitely risk here domestically as well, but I think as we continue to look at global prospects moving forward, the dollar is going to continue to be that safe haven that investors continue to flock into. We see that, although there are concerns regarding the deficit here in the United States, obviously we got downgraded by S&P, but moving forward, as global prospects continue to deteriorate, and specifically we're seeing some stresses looking like they're about to take effect over in China as well. So the overall theme of the central bank easing continues us to believe that we should see another bout of risk aversion really take hold sometime in the first half or the first 2 quarters of 2012. So that being said, the continued focus on the euro might not be the major focus for global markets as a whole, but the situation certainly is not going to be something that's going to be resolvable within the next 12 months.
Okay, then let's move on to the Aussie USD. What are you expecting there?
Okay, so the Aussie is an interesting story. Again, the situation that we see happening in China may continue to weigh on prospects there. If we just look at overnight swaps, we're still expecting somewhere in the range of 60 to 70 basis point cuts from the RBA. They did, the minutes of the last RBA did leave the door open for further easing moving forward. So on a 3-month time period, we're expecting another test of parity at some point. Before we do get there, though, there is a hurdle at 101.80, which seems to be some significant support. But assuming that we make it through that level, we're looking at a parity at a 3-month span, looking a little farther out at 6 months, somewhere in the range of 93.50 to 9400, pretty much testing some of those lows that we put in towards the tail end of last year. And as we start to pick up later in 2012, global prospects start to get a little bit better. Growth patterns across the world should start to at least improve, albeit this is still determined on a lot of the issues going on in Europe, and that obviously does have a headwind risk there that could emerge. But assuming that that's kept under control, we're looking for a 12-month rebound somewhere around the 104.50, 105 level.
So what about Aussie Swissy? It seems from your projections that you're expecting the 120 floor to remain intact.
I am, and certainly we've seen officials come back and reaffirm their commitment to aggressively or jealously defending that 120 floor. So, in the interim 3-month span, somewhere in the range of 120 to 122, just allow for market fluctuations. As we look forward, though, if we continue to see the euro come under pressure, which is what our expectation has been, there's definitely a high likelihood that we could see the S&B move in to raise that floor. So, we've heard them quote before. We've heard rumors of possibly raising it to the 125 mark. And if we do see the euro really substantially come under pressure, I would expect to see that the S&B would move in and possibly move that price floor. So 6 month to 12 month, we're looking at a floor of 125. I really wouldn't expect it to go much higher than that. Barring, obviously, again, further deterioration in the Eurozone, where we could see a stronger collapse in the Euro, might give them more intention to push them higher. But as it stands right now, we're looking somewhere in the range of 125 for the 6 to 12 month span looking out.
It's always great to speak to you, Michael. That's all for the moment, but coming up here on Dukascopy TV, we have more interviews and analysis. Goodbye for now.